Investing money in times of COVID-19. The pandemic has turned the world upside down. Nothing is as it was in the economy either. Investors should pay attention to this in 2021. The question of the right investment is secondary for many during the pandemic. The corona carousel and worries about health and job make you too dizzy. The economy collapses. Nevertheless, prices on the stock markets are rising. What does this jumble mean for investing in 2021? And what are the trends in the face of tighter wallets during the pandemic? State aid ensures price gains on the stock exchanges. There is uncertainty everywhere, in business and politics as well as in private income. As a study by the German Bundesbank shows, more than 40% of those surveyed suffered financial losses due to the pandemic. The prices fluctuate sharply on the stock markets because investors cannot predict what will happen next. State aid for the economy is still helping the stock exchanges to make gains. The money is also rushing to the stock market because other investments have become unattractive because of the zero interest rates. Because fixed income investments such as government bonds or overnight money hardly generate any returns. During the crisis, private households put money back, or rely on gold if investors leave their money in the account. They even make a loss because of inflation. For large investors such as pension funds in particular, there is hardly a way around the stock markets. It looks different in private households. Since most of them do not know how much money they have left in the coming months, they prefer to put it aside. Those who can then still afford to invest like to bet on gold. The precious metal is considered a safe haven when the economic and political outlook is uncertain. Commodities remain popular with investors. In addition to gold, the currency in crisis, the trend towards other raw materials continues. These include nickel, copper, lithium and cobalt. These systems are still popular despite the price level they have already reached. Because there is an increasing demand from industry, for example for batteries in electric cars and cell phones. On the stock exchange, some investors will hold back until the vaccines against COVID prove their worth and a way out of the shutdowns becomes apparent. When the economy recovers and people have more money to spend again, cyclical stocks will benefit. These are companies whose products are bought more again when the economy recovers. So cars, travel, jewelry. Also keep an eye on the foreign market in the equity portfolio overall. Consumer advocates recommend a balanced portfolio when buying stocks. The global preference for domestic stocks has not always proven its worth. Rather, it is worth looking out for companies that are benefiting from economic growth in Asia, explains Gertrude Trod, chief economist at Helaba, a German bank. The crisis started there, but the recovery also started earlier. The faster the Chinese economy recovers, the more business partners in the rest of the world will benefit. Trod expects the economy to grow by 5% in Germany in 2021. The stock market will benefit from this. Record prices for investments of all kinds. Residential properties are also still very popular, as investors can already use them now and at the same time have security in old age. The trend is towards somewhat larger apartments, as people factor in a study. Despite all the differences, the various investments have one thing in common. The prices are at a record level. This applies to gold as well as real estate and the stock markets. Consumer advocates advise not to be put off by this. In any case, there is no optimal time to start, just start. What is more important? There will be growth in the future. So let's stay positive.